Hello everyone, welcome to COVID-19 Survival Panel Session 6. And today we have Amanda Gascoigne as our keynote speaker. How are you, Amanda?
Yeah, I'm great, thanks Peter. How are you?
That's very good, thanks. And we'll hear more from Amanda shortly. If you have any questions of Amanda or myself during today, please send me a message via chat, and we'll answer the questions during the presentations. Or if you think of some questions later on, if you're one of the people who like to watch these webinars as recordings later on in your own time over the weekend or whenever it suits you, please send me an email, peter@ESSBIZTOOLS.com.au. In this session today, we're going to discuss what I've called relationships in this new environment. Amanda's going to talk about how to enhance and strengthen your relationship with your key clients, small businesses and medium-sized enterprises. I'm going to ask you if there should be a relationship move from your classification of just being the accountant, in inverted commas, of course, just being the accountant, to being your client's chief financial officer. And we'll talk more about that later on. And we're going to give you a COVID-19 news update. How to enhance and strengthen your relationship with SMEs is going to be presented to you by Amanda Gascoigne from Amanda Gascoigne Consulting. Amanda is an experienced accountant, had 18 years experience as a principal in a firm in Maitland, and brings to you considerable experience. And Amanda's going to take you through all that now. So how are you today, Amanda? And are you ready to take over this
Certainly am.
presentation?
So
I'll just
stop share, just down the bottom.
I should have gone to stop share.
That's it.
Okay, you're right now, Amanda,
and
thanks.
I shall share my screen. Here it is. Okay, play from current slide. Yeah, well, thanks for that, Peter. Yeah, so I thought I would talk today on, ways that you can enhance and strengthen your relationship with your SME clients. I don't know why I said SMS.
It's been a long week, hasn't it?
I know.
I've had the same problems all day.
So just as a little bit of an introduction, as Peter has just mentioned a little bit, but, I've been in the accounting industry for nearly 30 years. I was an accounting practice owner for 18 of those, and I sold out in 2017. I learned a lot of my lessons the hard way since starting out of my home as a new startup business in '99. GST was about to come on. So yeah, there's a lot of things that I've learned the hard way. So hopefully now, as a coach and mentor to accounting practice owners, I can help you actually not make the same mistakes that I made. So look, I'm really passionate about practice owners having a work-life balance and a biz-life balance. I'm also really passionate about practice owners earning what they're worth, and I've got a couple of numbers here that might have you thinking during this presentation. And yeah, look, I coach and mentor predominantly solo practice owners all over Australia and New Zealand. And basically the premise is to help them have a better practice and a better life. I have a Facebook community called The Balanced Firm, bit of a pun on words there from an accounting perspective, and also that biz-life balance. So if anyone would like to come and join this beautiful community, please do so, and it's on Facebook. So where's my little thing? So before I begin, I'd like to thank you also for taking time out, whether you are here with us live today or whether you are watching this via the broadcast or watching it on replay. So thanks for spending an hour with us to help you enhance what you're doing in your own business. So talking about enhancing and strengthening relationships with your SME clients, I thought these are the 4 things that I'd like to cover off on today. So thinking about why do your clients actually leave? And then I'm going to pose a few of the issues, what the underlying issues could be of why those clients are experiencing that. I'm going to share with you, just to get your minds thinking and perhaps resetting for the new financial year, what are some of the metrics of a contemporary and profitable accounting practice? And then finally, we'll share some strategies on how you can consider implementing ready for the new financial year to help you not have so many clients leaving, and really strengthening that relationship, because that's definitely what will help you have a really profitable, sustainable and a rewarding accounting practice. So why do clients leave? I just, wrote down a few notes as I was preparing this presentation. I did a little bit of a Google searching as well. Funnily enough, I found an article from March 1994, and many of the things that were explained in that particular article, nothing's changed. So 16, it's really interesting. So no, it's 26 years. A lot of stuff has still not changed, and we're still experiencing the same problems. And why is that? So common reasons, and I talk to SMEs. I've also, obviously having the practice for 18 years, people used to come to me and explain to me why they were leaving. So some of the things that I've sort of just I've written down, that that accountants are too slow to respond, whether that's responding to phone calls, emails, anything like that. You're just too slow. A lot of people are just too slow to respond. They're slow to turn around work. Clients will bring this work and it'll be months before it actually gets back to them. And with technology these days, you wonder why it's sitting in your offices for so long. So of course that's the source of frustration for clients. Another one is that accountants don't explain things to their clients, whether that is, why they're doing something, why something's not deductible, how you can do things better, but just basically not explaining. It's more like, okay, well, we're the experts, we're the accountants, leave it to us. But really, I think, so many clients have more access to information with the internet these days. They can Google search, they're talking to people, and they're wondering why they're not getting that advice potentially off their clients, of their accountants. They sort of feel like a number. I think they just feel like, there's just going through the process all the time. Perhaps as an accounting practice, you're not progressive or not proactive in offering advice. And I guess this is probably one of the biggest ones, which leads into the next ones. Often going to their accountants and saying, what about this? What about that? Can I claim this? Someone else is claiming this, or whatever. Someone's got a different structure. Why hasn't that been recommended? Someone's using a different software. Why am I still using my manual cash book or an Excel spreadsheet? So things like that. So you'd be surprised just how informed some of your clients can be. And if you're not the ones giving that advice, they're seeing that as not being proactive. Another, one of the real issues that a lot of clients have is that there's been mistakes made. And it's, it's been through, maybe you've got staff members who've made that mistake. You've been busy reviewing that job, have missed something, and then the client picks it up. So really embarrassing. Either you're sitting across in a meeting and they bring it up, or they bring it up, once you've actually sent out your package to them. So yeah, too many mistakes being made, and that's obviously a result of being too rushed and not having systems. It's a bit like a Groundhog Day. They come in for their annual appointment, and that same thing happens all over again. There's not much variety in the way that you're interacting, the time frames you're interacting during the year, and it is a bit like a Groundhog Day for both yourself and the clients, I would suspect, and maybe your staff. And the last one I've got there is that you're too expensive. Now, I've put that there as the last one. That's probably the reason that clients will give you when you ask, that they've gone to go somewhere to get the service cheaper. But in effect, that's probably the least reason why they will be leaving, because it's not too expensive. Because if they value the service that you're delivering and they trust you, they're unlikely to leave. So that's probably just an excuse that they say that you're too expensive. Or maybe it's the fact that you haven't actually articulated the value that you're providing. So these are the issues, and you may be experiencing a couple, or you may actually even be experiencing all of these issues in your practice. So that you're time poor, you've got too many clients, you've got too many non-ideal clients, too many deadlines, and that's something that we probably are not going to be able to get away from with the ATO, but we have to manage those deadlines. Too many fires to put out, so we're being very reactive and putting a fire out, talking to someone because there has been a mistake picked up, or someone's cranky, they're complaining about their bill. So we feel like we're always putting fires out, which leaves no time to work on your client relationships, no time to work on your own business and your own practice, no time to work on improving your processes and things like that, no time to train your staff and impart that knowledge. And it's like you end up taking the attitude, well, by the time I give it back to them, explain the errors, I may as well fix it myself. But that's another thing that's causing bottlenecks, and you're not going to help your staff members be more skilled and be able to help you in the future. And there's no time to be proactive. So this is a little, some metrics of a contemporary accounting practice. It's been taken from the 2018, The Good, Bad and the Ugly of the Accounting Profession. And it deals with a one-partner firm with $700,000 in fees, an average fee per client of $3,485, which equates to only 200 clients, and it's netting the partner net profit of $210,000. So you're probably looking at these figures saying, wow, how could I get something like this? This is definitely achievable. I can tell you from experience in my own practice and in the practices that I'm working on, this is actually a real, this is not pie in the sky stuff. When you have your practice ticking over and the right processes and you've got the right mix and you found your sweet spot, that number is not out of reach. And I'll show you an example of that as well, how that might be achieved. So just for a simple SME client, just your mum and dad type clients that we love working with, for instance, an annual compliance job, maybe somewhere between $1,500 and $2,000 plus GST. These are all exclusive figures. Maybe throw in a tax planning service between $1,500 and $1,750, maybe even more than that. 4 BASs, if you're just reviewing the file, doing some reallocations and lodging, $300 a pop is $1,200. Maybe you're doing some FBT employee contributions, doing them in April, and you can do that not as part of the year-end job because we're going to try to free up some of your time, that you can actually do this in April. And there's another $300 to $500. An STP review and finalisation. This year we've got a lot of clients coming on that it's their first year in STP, and it would be really prudent to be checking the information that's been going from their accounting software to the ATO. So maybe a review of that. Annual planning, budgeting, cash flow, break even, one or all of those things, there's another $1,000, and that is a really valuable service for your clients. They would love you to be doing that, and they'd be very happy to pay, because if they know what their break even point is, they know a budget to keep them on track, they're going to make a lot more than $1,000 for that investment. So this is the sort of work you could be doing that's really going to enhance and strengthen your relationships with your clients. Maybe you could offer an accounting file review and some training at certain times of the year when you've got a bit of lack of normal compliance workflow. And then if you're charging those quite good fees, potentially, because I know that it's not the top end, it's probably more the middle, but there's a lot of people charging a lot less than that. And that's where they're finding they're working 60 and 70 hours a week. They've got lots more clients, lots more phone calls, and they're chasing their tail and they're not really enjoying the work. But if you're charging fees like that, you can afford to be picking up the phone, giving ad hoc phone advice, really building your relationships and touching base several times during the year, and don't charge for that because you've got enough in everything else. So that's why I think it's a nice example for you to be thinking about going to the new financial year. What are you going to be charging and who are the clients you want to work with? So I've listed some strategies, and I've just broken the strategies up into 4 separate groups, but obviously there's so many more, but I can't cover them all in just this short presentation. But the strategies to improve the response and turnaround times. And these are some of the things that I actually did in my practice. So you decide on what your standard delivery times are. So for me, for a set of financials, it was no more than 4 weeks, and a tax return was no more than a week. Communicate those timeframes and delivery standards with your clients and your team. So everyone knows what's happening and they're going to be accountable for them. Put in place, procedures, systems and automation. So really good checklists, really good things to get all the information from the clients, and then the workflow, and then getting it out to the client. So it's a really seamless transaction, and that's how you can make money out of a lot of these things. The going backwards and forwards for queries and all that, that's what puts time on jobs. Maybe even an email autoresponder on your emails, because how many times do you receive an email, you're actually in the middle of something, so you don't want to respond, and you saw it come in, and then the client's actually on the phone because 5 minutes you still haven't responded. If you have an email responder on that, at least that gives them they know that you've received it and you'll respond within 24 hours. And even with that, you might even have some tiers. So, if it's a smaller client, maybe under $1,000, you might say, if you have got a lot of them, which I know a lot of accountants have, and that's where the time gets lost, maybe you say, well, the response time to them is 48 hours. But if you've got a client that's paying you $5,000 plus, you might actually say, well, I'm going to return emails within 24 hours or within 12 hours or something like that. So you could actually even work out some tiers if that was going to be easy for you. One of the things also is better time management and diary management. That helps with that decision fatigue and letting people start running your diary instead of you running the agenda. So if you've got stuff to review, if you've got things to do, have that blocked out and make that non-negotiable. Switch off your phone to flight mode, turn off your emails and get stuck into the work, and that will actually help you get those response times and turnarounds time a lot quicker. One of the other things that we do is scheduled in our work. So we could tell our clients, you're scheduled in for the month of September. That means in August, we'll send you a checklist. We want that work in the first week in September, and we'll deliver on our 4-week turnaround. If you don't bring it in September, you wait until the end of our scheduling period, which was February. We tried to schedule all our work in from July to February, and then have to wait till then. And you'll be surprised how many times people will actually now start to bring their work in at the allotted time. Utilising technology. I know a lot of practices are not utilising technology, and that's one of the reasons they're spending so much time and so many hours working in their businesses. Improving your workflow processes and really making it easier for your clients to get information to you and for you to get information to them. So things like using electronic signatures, using things like portals, using more of the electronic type communication can really help in that area. The next little sort of strategies are in relation to educating your clients. And I know a lot of accountants feel like all this education we're paid for and they just hold it so dearly and don't want to actually share it. I actually had the different approach, and I shared so much knowledge and education with my clients and empowered them to do things themselves. And then they would come to me for stuff they couldn't do, and they were happy to pay for that sort of stuff. So things that I did was, and I advocate for practices to do, sending out newsletters, holding seminars a few times a year, embracing social media whereby you can get message out en masse to your existing clients and potentially potential clients, and your web presence, have a web presence. When you think of a client as you're reading an article, email that article straight to them to show that, they're in your mind, and they really appreciate that. In meetings, take time to explain things and assume nothing, assume no knowledge. I did a seminar in Queensland last year, and I started just talking just randomly about substantiation, and people in the room said their accountant never told them they needed to keep their receipts. Now, I know that seems funny, but no one's ever told them, and a lot of accountants would just assume a business owner knows that. So just don't assume anything. And just really start in, educating your clients, and spending extra time with any new clients coming in to inform them of the basics, because we don't know what their other accountant hasn't told them, and they don't know what they don't know. So yes, really start talking to them and having those conversations. Preempt queries and be on the front foot with that mass communication. So JobKeeper's a classic example of that. The people that just took all these phone calls from clients coming in about JobKeeper, they've got no work done. the ones that actually spent an hour or two getting a big email out and sending it out en masse to the clients and asking them or explaining what the process was going to be saved a lot of those phone calls. So that's where you can be preempting things. Having frequently asked questions and fact sheets, I found that really helpful. So when, you know, the private health insurance came in, maybe medical expense rebate, I know that's out now, but I used to have fact sheets that we could send to clients. Encourage your clients to use some of the free resources, because a lot of the stuff that we give, the advice that we're spending, that we feel like we can't charge our clients because it's free, it's on the internet, it's everywhere, we don't feel like we can charge them, but they're actually using our time, and that's what we're selling. So getting them to start using those free resources, because of course they don't want to pay you for that when it's free, but if we need to encourage them to get there and start looking at those things for themselves, and basically empowering the clients to take more ownership of their finances and their taxes. Strategies to be more proactive and more attentive with new clients, asking why they changed accountants, asking them what's important and having that as an agenda item. So you're really getting to the crux of what they actually want. Let them know what services you're able to offer, because that might be different to their previous accountant. And then this is a really critical one. I advocate only working with clients that there is a good fit and that are your ideal clients. So ask yourself, are they a good fit? And if they are, we'll obviously take them on and, you know, have a really efficient onboarding process in relation to an engagement letter, quoting and expectations. If they're not, politely decline them as a client. And there's nothing wrong with doing that, because they probably are the clients that you're spending a lot of time on, and they're not the ones that are taking you away from your other clients who really want you to work with them more. And also take the time to review their structure, their processes, their technology, and then check in on them in a month's time so they can see that you are walking your talk and you are proactive. For existing clients, going into this new financial year, I want you to ask yourself, are they a good fit? If they aren't, ask them to move on. And if they are, I would also be touching base with them right now or in July to see whether their priorities and their perspectives change, because I know that has with a lot of people with COVID, and what you think they might want out of their business might be something different. So they might say, I want more money, I want less money, I want to work less. And then you can help them achieve that as their accountant, because you know the numbers. And ask them if there's anything else that that you could do physically. Like, just ask them, can I do better? Can we do better? Reviewing their fees and potentially looking at this new scope of the engagement, and then re-quoting. Same with the existing client, the new client, take time to review their structure, their business processes and the technology that they're using. And look, I know you might think, well, I probably should have actually been addressing these things before. Let's not worry about that. Just let's use COVID as a reason for resetting and doing a few things differently. And then again, diarise to follow them up as well. Is in relation to being progressive. There's lots of ways, but these are a few ways that I know that a lot of people have been using. Some of the things that I did, embrace the paperless office technology. I did that in 2008, so I was able to work remotely even then. Electronic work papers for standardization and getting things done quicker. Use of the portals, like I mentioned before, getting information quicker from clients and to clients. Maybe even online booking system for tax returns or for other appointments, and that can be on your website, so people could be making appointments out of hours. One of the things that I advocate is having a standard schedule of minimum fees that you can link back to your budget, to your desired fee levels and desired income levels. And that is actually really helpful when you're quoting, that if someone is coming and they think that they've been overcharged from their previous account, and yet you're actually higher than that, you can actually tell them that straight away. Offering new ways to pay, so like a monthly subscription type service, or even offering credit cards. I'm surprised at how many practices don't offer a credit card facility, but that's how a lot of businesses pay these days. And if you are actually not offering that, you're last in line, because they've got to get the cash into their account before they can pay you. Embracing new work trends. Now that's the working from home, the Zoom and the phone meetings that we've been doing now, which everyone is used to. If that's something you love and it's giving you more flexibility, let's start bringing that into the new regime for the new financial year. Maybe it's even the 4-day work week. And New Zealand, I know, are looking at that, and there's been lots of great cases that that's actually really helped. And ditching old-fashioned ways, like get rid of the paper, get rid of the manual cash books, the Excel spreadsheets, and maybe the notion that you do have to work 9 to 5, because, you know, see what we've been able to achieve in the last 8 weeks. So I believe COVID-19 is definitely, and the new financial year is definitely your opportunity to reset. So you do have the practice that you really want, the income that you want, and the lifestyle you want. So there's some ways that you can keep in touch with me. I have a weekly newsletter. As I said, I've got the private Facebook group. I'm on all the social media channels, and that's my website, amandagascoigne.com. So any questions, or Peter, would you like to ask anything, or we'll head straight back to the agenda?
Amanda, pardon me. There's been no questions come in yet from the viewers. Just a reminder, please go to chat and type them in. But I have a few questions and probably support everything you've just said. But one of the key points that I noted down, I'd like to highlight. For the last 20 years, I've worked as a consultant. So when you're a consultant, even though everyone knows you're an accountant, people, a bit like what priests must copped, I think, people come and tell you their little secrets, their confessions. And this has mainly been SMEs, of course. And I think the area you mentioned about being proactive and giving advice to clients, I think is very important, because they complain that the accountant basically says good morning or good afternoon, takes their files off them, and doesn't offer anything. And I think really in this climate, this whole generation, we need to be proactive in giving advice to try to keep in front. And I'm going to talk a bit about this later, so I don't want to go back over things, but I worked for 12 years in commerce, and I was Chief Financial Officer and Company Secretary of a listed public company in that time. And I would have got the sack if I was not proactive every day, because the CEO expected all of the management team to be proactive. And I think he probably picked on me a bit more because he thought that I should have known everything, the legal side, the marketing side, the human resources side, which obviously I didn't, but I made sure I could project manage that. So I think this concept of being able to be proactive in giving advice to clients is very important, even if it's to say, look, I think you need a human resources expert to look at such and such.
Oh, absolutely.
And I can give you some names.
Yes, you don't need to
not to just ignore it.
Yeah, you don't need to do it all. You actually have a great team around you that you can refer that out. But being proactive is, you know, it's a couple of things. Clients love it. And it actually means that we are less stressed because we're preempting what can happen.
That's right.
We're thinking, we're getting that out. We're stopping those, you know, massive amount of phone calls. And, you know, you're actually getting that information and disseminating it in a much better way. So, of course, we can answer questions. But if you're doing, you know, if you're finding yourself repeating the same thing over and over again, you know, or teaching someone, maybe it's even staff, teaching this, you've got to actually be proactive, because you're not going to create change unless you do that. And it makes for, I think, being proactive is fun because, you know, there's always something else to learn, some new technology to embrace, and it actually mixes things up. So it's not that Groundhog Day for, you know, because accounting, obviously there's some things that are very procedural and they don't change from year to year, but there's a lot that you can, and you can just sort of, I guess, you know, for a better, you know, not a better word, you know, but spice it up each year so that something's always different, that you're keeping the passion as far as what you're doing.
Yes, and I think it will open the clients up. You'll get a conversation, you'll get a communication, because they suddenly realize that you're on their wavelength. You are trying to understand their business.
Yes, absolutely.
And I think a lot of SME clients don't really believe that the accountants are trying to absorb an understanding of what their business is about.
Yeah.
And I think this is, and please, to our viewers, visit your clients in their premises. The number of times SMEs say to me these days, oh no, our accountant's never been to our premises. And I find this from accountants, a lot of them are younger ones, and I say, we'll go to their premises when I'm acting as the consultant, and they say, well, I have to go and get the address. I don't know where it is.
Yeah.
How long's this guy been a client of yours? And you'll get told 5 years. And like, you've never been there. So how do you know what's happening in that business? I know it takes half an hour, and you can decide whether you're going to charge that. I wouldn't charge the travelling time, but most definitely the meeting time is chargeable, as long as you're not just sitting there talking about the football results. But it allows, I think, the accountant in public practice to absorb the culture, the concepts, meet some of the staff, and have a far better grasp of what that client's all about.
You're right. And at the end of the day, I know a lot of people think we're producing financial statements, tax return. At the end of the day, we are in the business of relationship building.
That's right.
Because that's what people want. They want us to be the trusted advisor. They want they don't want to be swapping and changing accountants. They want a long-term relationship. And if they're getting looked after and they're getting great service and great advice, they will stay. So, you know, because if you think that what you're doing is a commoditized type, you know, service or whatever, people can actually get that anywhere. They might, you know, more and more people are doing, you know, their business like that online. So if they're only looking for like a bit of an order taker, they can get that anywhere. They come to us because they want to have a relationship. And I think, as you said, when you're actually meeting and asking more those extractive questions, you're getting to know more about the client's business, and you're also getting to know more about the clients as an individual and what really makes them tick and what they want out of life. Because, you know, I know a lot of accountants are working 60, 70 hours a week, and they may love that. But I tell you what, a lot of their clients would love you to show them a way to get same amount of money working less. And I actually think there's a lot of accountants who would love a way to learn how to make the same amount of money in, you know, and knock off 20 hours of what they're doing. So, you know, it doesn't matter which industry, it's all relevant.
Yes, that's right. And the other thing, I think, in being proactive, you should also be very mindful of the government grants that are there, or other assistance that's out there, whatever programs, and to have an understanding of that. Now, I know some clients try to catch you out at times, but if you've got a client who's an exporter, when you turn up to talk to them, I think you should be very familiar with how the Export Market Development Grant operates, so you can talk to your clients about it. Now, you might have decided that the client might not have spent the required $15,000 to be eligible to make a claim, but I would never assume that. I've heard of situations where the client says, of course I'd spend it, but it's been allocated over 10 different headings in the P&L account. So don't assume, and raise it with them. It's showing them that you are interested in what they're doing and know something about their industry.
Yeah, and caring and genuinely interested. And that's what comes also by having your ideal clients. So if you have clients that you're not really, there's no rapport, that's going to be really hard to do. So this actually, like by having that, that concept, which I talk about is having your ideal clients, all this stuff comes quite naturally because you've got a general, a really nice rapport, and you're genuinely interested. So that's why we really need to be setting our practices up, that we are actually finding our sweet spot with the right clients, the right pricing, and getting the right remuneration for ourselves.
Okay, I'm just going to check again to see. No, that didn't generate any questions at this stage.
That's
so
fine.
We might, thank you very much, Amanda.
Thanks. Yeah.
We might move on, and I'll just share the screen, and we will resume. Okay, the COVID-19 news update, which we produce each week. A number of these are articles out of the Financial Review in the last week. Fewer shops as retail reinvents itself. So if some of your clients are in shopping centres and there's a couple of big businesses, your clients might need to be a little bit aware of watch what's happening with those other businesses. If they're seen to be anchor tenants, what would happen if they decided to move on? Because some of the bigger independent franchise chains are really saying that they're going to be reducing the number of bricks and mortar outlets they've got around Australia and probably around the world, and looking to sell more online, and that might affect your client's business. And perhaps it might be a good introduction to start talking to those of your clients who are not selling via the internet, to start a conversation with them as to whether they should be starting to do that as a bit of an insurance policy. There's been a lot of commentary, if you're reading the Financial Review and other newspapers, about talk about an overhaul of JobKeeper. The government apparently is going to conduct an overall review in June, and it's going to be interesting what comes out of that. There are some commentators and politicians calling for JobKeeper to be changed, and in particular to make the change if the business improves and it's not continuing to be 30% behind the 2019 month or 3-month comparison. You need to bear that in mind, even though the Prime Minister and the Treasurer and the Deputy Commissioner of Taxation have all said very clearly that JobKeeper is running to the end of September, and that if a business improves its turnover, having clearly had more than a 30% drop in March or April, or in the projection of the 3 months, April, May, June, they've said even if there is an improvement, the business will not lose JobKeeper. But there are reports around, so if you are doing budgets, perhaps you need to do a few alternative calculations to see what the position might be if JobKeeper was reduced in some way. The government has already exceeded apparently the $130 billion that it had budgeted. The other interesting article I found this week was the quote in the Financial Review on Monday of the Small Business Ombudsman, Kate Carnell, where Ms. Carnell put a message through to the banks: don't pull the plug too early. And Ms. Carnell is saying banks need to be sympathetic to the small business community until the end of 2021. Interesting comments. Now, what Ms. Carnell's talking about is that the coronavirus SME guarantee loan that I'm going to talk more about shortly has a life expectancy to the end of September. Any unspent money out of those funds that the Reserve Bank made available are to be returned to the Reserve Bank at that date. And there's a fear that banks will not be in the same mood that they're in at present, even though there's some criticism, even started with the Prime Minister a couple of weeks ago, as to the speed with which they're processing these special loan applications. So things could also move there. And I think what all this is highlighting is the need for some budgets and cash flow forecasts to be prepared with some what ifs introduced. What would happen if your client was deemed no longer eligible for JobKeeper from, say, July onwards? And we're going to talk more about that in a moment. The other interesting comment in the Financial Review was that an article which was headed COVID-19 demonstrates that AI, intelligence, will not replace accountants. But what it is saying is that businesses and indeed accountancy firms need to be reacting to the changes that are occurring in digital communications and life in general. So it's worth reading. That one was in the Financial Review a couple of days ago. I just can't see the date. There's also been a ruling about sick leave that stood down workers can't be eligible for sick leave. This was an employee of a mining company during this COVID period, and that probably eased some concern with some employers. But there's been another sick leave holiday pay decision which would be upsetting many of your clients who employ casuals. That was the decision of the federal court, one judge, and I would be expecting that the various industry organisations would be seeking to appeal that decision, because it's going to cause massive problems to businesses because it's overturned the whole concept of casual pay. And we've also had the release of the COVID-19 SAFE plan. It's fairly straightforward. I've sat down and read it. I think you as advisors to your clients need to have read it and understand it. Obviously implement it within your own firms, but be prepared to act as a project manager with many of your clients to prompt them to make sure that they have implemented these requirements, because many of them are workplace health and safety requirements that they need to be doing in any case. So that's the update on COVID-19. And I don't think I've got any questions. I'm just checking. What I might move into now is what I've called the relationship move, accountant to chief financial officer. And I've analysed what a lot of you have been doing of late, work that could be considered a chief financial officer role. A lot of the work you've been doing for JobKeeper, research and eligibility determination, looking whether your clients meet the 20-person rule and have apprentices or trainees and applying for the subsidy, eligibility for the commercial rental waivers and or deferrals, and then possibly advising your client on how they might go about that. The legislation is obviously your state or territory's legislation. All that the Prime Minister announced was the overall agreement that the premiers and chief ministers had agreed to for that. But that's available, but your clients need to qualify for the JobKeeper program, irrespective of whether they wish to draw down the $1,500 per fortnight. The applications for the coronavirus SME guarantee loans, I think, are definitely chief financial officer role, because to secure those loans, the client is going to have to produce documentation, which I think he's going to, or she will be turning to you to prepare for them. It's a business plan looking at least at the next 3 years, or in some cases a dot point business plan, budgets for 3 years, cash flow forecasts. So that is work you could do. And I've also already mentioned assistance on the introduction of the COVID-19 SAFE plan. Business conditions are changing, and you don't need me to tell you that. But I think we're in the calm before the storm at present. And someone said to me the other day, when I said that to him, an accountant, oh, I can't stand much more of this. And I said, well, I'd be taking a long weekend this weekend if you can, because I think you need to take a breather, because the fun is only just beginning. We live in this calm before the storm because there's no debt collection action being instigated by banks. Indeed, I read an article the other day that a number of the liquidators have laid off their staff, and some of them have applied for JobKeeper because there's not much work for them in this period, with the legislation being temporarily changed that they cannot instigate action against people who owe money. We've got the JobKeeper payments. My golf club's got JobKeeper payments coming in for 12 employees. And I sat down the other night and worked out just what all that means. And it's a fair bit of money. And some of your clients have got JobKeeper payments for a lot more than 12 employees. So that's a real cash flow benefit they're getting. But what would happen when it ceases, especially if some of these people who are campaigning with the government that changes are made before the 30th of September. I'm really thinking now at the 30th of September when that change is going to occur. And the other big thing, of course, is the boost in cash flow payments. There's a lot of that, somewhere between $20,000 and $100,000 is flowing into businesses between early May to October this year, boosting cash flow payments. So there's a lot of extra money flowing around. And there's loans whereby the client has not been required to put up any security other than, I understand, some of the banks are asking for a personal guarantee. This, of course, is the coronavirus SME guarantee loans. $250,000 repayable within 3 years. Supposed to be low interest rates. I understand some of the banks are charging around 4.5%. But 50% of the debt's guaranteed by the government, federal government. Those loans aren't going to continue beyond 30 September. I already talked about the liquidators. And the banks in their interim results have been providing very large sums of money for doubtful debts. So what's all that mean? I think after the 30th of September, there will be very significant changes. And my suggestion to you today is you need to start thinking about these changes for your clients now. Now, I know, and I was in practice for 23 years as a principal, I know you're all busy still doing tax returns, and this whole coronavirus problem has come at a very bad time of the year. But your clients need you to be very active beyond whatever you've done for them now. You've got them into JobKeeper, or you've given them some advice about an apprentice subsidy. I think beyond 30 September, it will be very difficult to negotiate new loans with banks. In fact, I suspect the only client that's going to be offered a new loan after 1 October is going to be a client that doesn't really need the loan. We all know the old joke, banks only lend to you when you don't really need the money. Because banks have laid out a lot of money already, and a lot of it a lot quicker than what they normally would have. Liquidators are saying come October, they're going to be very busy again. And we know what that means. The Australian Small Business Association General Manager, Peter Strong, has indicated that unfortunately his organisation believes there will be at least 200,000 businesses fail and 100,000 won't get started. There's going to be decreased amounts of funding available from government grants. I monitor government grants. We have a separate program called ESS BIZTOOLS, which tracks grants that are available for various clients. I've never seen so much money get thrown at grants in such a short period of time as what we have over the last 8 weeks. Millions of dollars have been paid out. I think the state and territory governments in particular have probably paid out 3 to 4 years of their normal funding for government grants. Now, some of them will continue, like the Export Market Development Grant, because it was not increased. But there will be a lot of pressure politically to say we've given the SME markets, and the SMEs, turnovers under $50 million, are the prime recipients of these grants. I don't expect them to be in anywhere near the volume or the amount of money from 1 October onwards. And I think that could last a couple of years. Your clients need proactive services now. I don't think it's any use waiting to the 30th of September. My suggestion to you is you need to be saying to your clients, you need to sit down with them now and prepare a strategic plan. And you need to prepare some specific budgets. What is the position between now, let's call it 1st of June, to the 30th of September? And you might have to do some variations based on JobKeeper. If your client's current turnover is still below 30% of what it was in 2019, you probably don't need to worry. But if your client has shown an improvement, and especially if they are now showing, in fact, growth. They haven't lost 30% at all. They're actually gaining. I'd be doing some devil's advocate type calculations, some what ifs, and removing the benefit of the JobKeeper payment from their forecast to see what the position is then. But then I think you need to be looking at the period that Kate Carnell, the Small Business Ombudsman, is referring to, the period from October to December 2021. That's October 2020, obviously. So what's going to happen in that 15-month period? And does your client need a financial injection in any of this period? You could also obviously do the 3-year forecast, because if you're thinking about getting one of those coronavirus SME guarantee loans, you're going to need forecasts for 3 years. And out of all that, what are the strategies? What's this business going to do? Everyone that is writing articles on the web, on newspapers, or anywhere is basically saying there's going to be significant changes. There's going to be a lot more products sold or services supplied via the internet, because people have suddenly learned how to use Zoom and have really used the internet now out of their own homes, because 50% of the workforce has been working at home. So what's the strategic strategies for your business clients? And out of that, I think you should be preparing a business plan for them. And one of the key recommendations I'm making to you is that you indicate to your client there's been a lot of changes, and one thing you should be doing is having a business review meeting, preferably each month. You could convince me to say 3 months, but preferably monthly, whereby the leadership team of your clients, I don't care if it's only 1, 2, or 7 or 8 people, meets, but with you as their accountant. Because I would encourage you to be indicating to your client that you're now wearing a chief financial officer hat. You're looking at a broader range of matters than just taxation. Taxation's still got to get done. It's still very important. But I think your clients need assistance in these other areas. Or let me put it another way. I think all this work that I'm talking to you about now needs to be done. And if you're not going to do it, is your client, do they have the time, the resources, the knowledge, the willpower to sit down and prepare these exercises? If so, great, they can do it themselves. Or are they going to go to someone else, to a business consultant? Now, if you're happy with that, that's probably okay, but I would really think seriously about that. You're the trusted advisor, and I think you're the one that should be supplying these services. And perhaps delegating some of the other work you have in your firm, perhaps closely reviewing your client list. And perhaps it's the time to say to some of your clients, we think you could move on to someone else, because I don't think you need large numbers of clients. We saw that case study that Amanda showed you at the beginning on that practice. Well, I've already said all that, haven't I? I think your role should be changed to Chief Financial Officer for your clients. And the name means something because it symbolizes you're going to do more work for them. I could have put there / company secretary as well, and that brings the whole administration function. Now, it doesn't mean you're going to have to do all these things. You'll probably be project managing some of them. But that way, you will be making sure that they're attended to, that minutes are prepared of the business review meetings, action plans are prepared, that there's a review of the material before the next business review meeting to make sure things have come back. So a proper business meeting. And everyone's there, the guy in charge of production, the guy or lady in charge of the transport operation, the office manager. The whole leadership team should be coming together to analyze where the business is going. How far have they strayed from their strategies? And I've got here a list now of some of the other duties. And Amanda went through some of these before, but I don't think we've really duplicated any of these, Amanda. Weekly performance reports. In my 12 years in a public company, I realized that public companies run themselves like a series of small businesses. And one of the key things that a lot of them do is they prepare, and then head office or management receives weekly reports on the performance of an individual business unit. Now, I was in the meat industry, so we had some very large export meatworks, but we also had hundreds of retail butcher shops and some delicatessens and boning rooms, and all individuals, probably over 500 business units. Every week, a profitability estimate was prepared for each of those, and it was then discussed by the local area manager and the manager of that particular business unit, so that they got their results. They saw their key performance indicators. Can't you set this up for your clients? They won't be as big as that, of course. The monthly financial reports, I think, should be prepared for each individual business operation. I have a pet hate of everything getting put in one P&L. Do that for the tax return, but for management purposes, your clients really need it dissected into individual business operations so that they can sheet home responsibility and analyze the performance. I've talked about key performance indicators. Ask the person who's in charge of an operation, though, what key performance indicators they'd like to receive. Sometimes you'll get a very blank look, which I got on a few occasions over the years. What's a key performance indicator? Because no one's ever bothered to explain it. So you go, or someone goes to a great deal of trouble to working out a gross profit percentage, and they've got no idea even what a gross profit is. It's part of the mentoring role that I think, as wearing a chief financial officer's hat, you will explain. And I've got a few. Suggest to your client that you could analyze whether their selling prices, their sales mix will achieve the desired profit. We've got a program on that in ESS BIZTOOLS. Or look at the charge out rates. You could even do your own accounting firms. Are you going to meet the profit that you've targeted? But it might be for your tradie clients. Too many tradies just copy their competitor when it comes to pricing. How do they know the competitor's right? He might have nowhere near the overheads that your client's got. So you can mentor the leadership team to understand the financial reports, and mentoring team members on what their role is and what they understand. Now, your client's probably not going to come up with these ideas. You're going to have to talk to your client and say, if we want to get your team really functioning, we really need to make sure that whatever reports they get, they clearly understand and they know where all this fits in the overall scheme of things. I've got a couple of others, but customer feedback's very important, and at times that's not coordinated. So we're going to look at strategies, and I see your key role as being to assist the leadership team to implement these strategies. The other big thing is the availability of finance, to finance the business. And your role could also be to create an awareness of the alternatives that are there to actually borrowing money. So it might be raising capital as under Section 708 of the Corporations Act, or crowdsource funding equity raising. We're going to have an expert on crowdsource funding equity raising speaking at next week's webinar this time. If you're interested, come along and listen. So ESS BIZTOOLS is a product that I established some years ago to supply improvement tools to assist you to add value to your clients. Saves you the time of writing. And we have a COVID-19 coronavirus product package, and its product that it's linked with is survival in difficult times. You can subscribe to these products individually, or there's 23 other product packages, or you can subscribe in a total amount. But please go to our website. There's the details, essbiztools.com.au, and have a look around. If you've got any questions, please give me a ring. Our next webinar, as I just said, is on next Friday at 12 noon AEST. Our guest presenter number 1 is Jordan Lowry, who's the Managing Director of Blackstone Business Group. Now, they're a human resources supply organisation. But what Jordan wants to talk to you this time, and he's already spoke once for accountants in this series, he wants to talk about impact and mindset. the COVID-19 has caused, because he's been at the real front edge of all this and has seen a lot of the problems that businesses have confronted and the mental impact that it's had on both employees and employers. That's going to be interesting. The other presenter is Andrew Ward, who has been an independent director of Crowdfunding Institute of Australia for many years. And he's going to give you an update on crowdsourced funding equity raising in Australia and the business opportunities that it presents post COVID-19. I think you'll find that very interesting, because one of the activities that I think you should be considering when you're looking at the financing of your clients is to look at crowdsourced funding. And to register for that webinar, please go to our website, ESS BIZTOOLS webinar. Or you can go to our website and look at survival in difficult times. Or you can contact us on those phone number or email address. So stay safe, please. Thank you for participating and viewing this webinar today. And good luck in your firm. Thank you very much for your contribution today, Amanda.
That's fine, Peter. Thanks for having me.
I think we'll try to get both of us back there now. So you there, Amanda? Yeah.
I'm here. Yes.
So to everyone that's either viewed us live today or joined us later on to watch this, and if 3 a.m. is your perfect time, that's great. But please don't contact either of us at that stage. Just send us an email if you've got any questions. But in all seriousness, if you do have questions about any matter we've raised today, in Amanda's very thoughtful presentation and my summary of what I think you can do to become the Chief Financial Officer for your clients, please send us an email, and I will pass your questions on to Amanda, and we will reply to them, and we will summarize them on the ESS BIZTOOLS website.
Peter, could I just reiterate 3 of your points, just to sort of wrap a couple of things up, if you don't mind. So as far as, you were talking how everyone's going to be so busy in that, to September period, that's why I think when I talked about the scheduling of tax returns and compliance, it's really important, because you're going to potentially, if you're not managing that process, you're going to have a lot of your clients wanting their stuff done early. So it's actually to be proactive and sort of start to step them out. So obviously all of your really good clients, maybe you need to have a bit of a scaling and a grading and where you're going to be putting, your clients in from a workflow. I think we need to be really proactive with that, because that was one of the things that you said. I mean, maybe, potentially you don't actually say yes to some new clients at the moment, because that could actually, be detrimental to your longer term clients. Secondly, don't assume that your clients wouldn't want to do business planning. Those things that you've said that, a lot of people will be thinking they've had a lot of fee resistance from their clients over the years. Let's not worry about that. Let's put it on the table, offer the service, and if they choose to decline, that's okay. But I think with COVID, people are actually starting to realise they should have been looking at the numbers a bit closer. And then thirdly, about the reporting, I love it how you said the monthly and quarterly reporting for your clients. I'd also like to encourage accounting practice owners to do that reporting for themselves.
That's right. That's right.
I really need. So that was the 3 points that I made. So sorry to interrupt at the end.
That's all right. That was great.
To bring it up, and it just all goes back. So, we obviously don't know what each other is presenting on, but it was really nice then to bring those few extra points together.
Yeah. Okay. So thank you very much, everyone, and stay safe. And if you have any need to talk to Amanda or myself, please contact us. Amanda's phone number is on our website. Or do you want to give it to them now, Amanda?
Oh, it'll be on the website. It's fine. Yeah,
it's on the website. Yeah. Or send us an email. But if you've got a question, please ask it, and we will get back to you. So thank you very much, and I look forward to welcoming you all again, and bring some of your friends next Friday when we have the next one of these webinars, where we're changing the slant a little bit. We're going to have Jordan Lowry, a expert in human resources, talk about some of the human experiences that he's had over the last 8 weeks. And that will be very interesting, because he's already told me what some of them were like. And Secondly, because we're starting to talk about crowdsource funding, equity raising, we're going to introduce 4 experts in that area over the next 6 or 7 weeks, speaking in these webinars. And the first one is a great guy, Andrew Ward from Sydney, who will be speaking to us next Friday. So thank you very much, and we'll see you around the trap somewhere, and hopefully we'll be able to have a drink at a bar soon. Thank you. Bye-bye.
Right, bye.
Bye.
Thanks, Peter.